You were listening to chartingwealth.com for Monday, the 4th of April, 2016. What do we have going on in the market? Well, the market continues to move up. That weekly chart has not failed us yet, continues to move up. We do see every day it seems to get a little bit closer and a little bit higher as far as the MACD and the signal line go, but they've not crossed over going down yet. That would be the blue MACD moving average convergence divergence line moving through the red signal line. Derivative oscillator lost a little bit more energy throughout the course of the 2-day candle. We have a red down candle that's been forming over the last 2 days as the week draws to a close on April Fool's Day. We have YYY, which is a total market exchange traded fund. It's put up by iShares and it represents what's going on in the whole market. The whole market was up 0.6% for the day on Friday. Those of you who've been following us waiting for the market to back up and roll back over going up, well, that occurred in the total market back the morning of the 31st, Thursday, the 31st of March, and what we saw happen was the market topped out a little bit, went down on Friday morning, and then shot up in the afternoon 0.6%. Those of you who looked for an opportunity to get into a trade that morning have seen things going your way after a little bit of trepidation probably at the beginning, but again, what is it we do? We rely on our big chart and we wait for our small chart to back up, that is, go in the opposite direction, then turn around and cross back through on our MACD and go in the direction of the big chart. That is the safest and easiest way to make good, reliable trades. Now, is it always perfect? Hell no. Nobody ever guarantees the market's going to do what you think it's going to do. The market's going to do what the market wants to do, but typically it's going to go in the direction of the bigger chart. What we want to find is a good jumping on point. We're rarely going to be able to jump into the market when it first starts going up, as it did, crossed over going up on the big chart back on the 16th of February. Sure would have been nice, though. The market that day opened at around $92. It's since gone up $20. Now, how would you, $10. How would you like that? How would you like a $10 gain in just the course of about a month and a half? That would be a pretty great return, wouldn't it? Well, some danger and trepidation there because it looked like it was turning around before it went back down markedly back all the way over on the 25th of February. We didn't have a crossover though, but we started to have one right as the market took a big nosedive toward the middle of February. But once it took off again, we've been looking for rollback points so we could hop in and ride it up. And the safest way to do that is to look on your smaller chart for a backup. That is, the market's moving in the opposite direction on the short-term chart. And then it turns around and starts moving in the direction of the big chart. Now, let's go from our 2-day chart on the total market to the 2-day chart on the S&P 500 as represented by SPY. That again is the Spiders S&P 500 Trust Shares Exchange Traded Fund, or ETF. What do we see going on there? Well, it crossed over going up also back on the 16th of February, our 2-day chart. And what we see happening right now is we almost have a reverse hammer forming on our 2-day chart. Market has continued to go up. Derivative oscillators leveled out. What did we see happen over the last few days? We go to our 4-hour chart. Market was up technically 0.67% for the day. We saw the SPY cross over in the afternoon on Wednesday the 30th. It then slid sideways, dropped some in the morning on the last day of the week, April Fool's Day, the 1st of April, and then shot up in the afternoon, actually went much higher than it ended up closing out. It was up again 0.67%. So those of you who look to get into a trade on Wednesday afternoon or Wednesday morning, particularly in the afternoon, you have seen some good gain happen over the last day, particularly in the afternoon on Friday. We're always happy to see what we've been calling for happen. Hopefully you jumped into a good practice trade with your virtual money on your virtual account that you opened on any of the online brokerages. And again, if you haven't already done that, you need to. It's going to make what you do with us every day, practicing, so much more valuable than just jotting down a figure somewhere, because you'll learn how to go onto the web platform of the online brokerage firm that you're using, how to log in, how to search for the proper ETF, how to put in your purchase price. And again, we never purchase at the market. You set a price, a limit order, always a limit order. And then you're willing to buy at that price or lower, not higher. When you put in a market order, remember, the market maker is going to buy you in, particularly if it's early in the day, if it's in that first hour, at whatever level he feels like it. Not a smart way to go. Same thing when you go to sell. You want to make sure that you put a limit order in and that you sell, or well, I put an order in and sell just below the prevailing price, so I'm good. I know I'm good to catch it and have the market maker buy me out immediately, because when I'm ready to sell, my friends, I'm ready to sell. Take that profit and run with it. And this is what it is all about. Now, let's go back to our 2-day chart and take a look at what's going on with the Qs, up over 1% for the day. Those who've listened a while, you know the Qs is my favorite index. I love it. It is the NASDAQ 100 QQQ. It is the PowerShares QQQ Trust Series 1. It crossed over around the 18th of February going up. It's gotten a little long in the tooth, but it continued to surge up on both Monday morning, a little bit of a pullback, Friday morning, a little bit of a pullback in the afternoon. What we see happening on the 2-day chart is we had a move up, a nice good move up on the 31st, and then a continued move up as far as price went. What we're looking at when we're looking at the kind of candlesticks that we use on the 2-day chart is we have a 2-day chart. We have a type of candlestick called the Heiken Ashi. That's Heiken -SHI. What is that? Well, it actually forms the candle different than the high, low, open, close. It uses a different formulation. It gives us a much better feel and a much smoother move in prices, so we know what's really going on. That red candle is somewhat alarming as far as the way that it has formed, although the price movement, like I said, was continued up for the day. Let's look at our intraday that I was talking about just a minute ago. And what we saw happen was some down movement in the, I did that in reverse just earlier, some down movement in the morning, and then a shot up in the afternoon, a spinning top actually in the morning. Derivative oscillator pretty much paralleling throughout the day. The MACD and the signal line have diverged even further, which is good to see, particularly with all that price movement. Those of you who jumped in on the morning of, pretty much the morning of Wednesday the 30th, have seen some nice appreciation, whether you jumped in that morning on Thursday or the afternoon on the 30th. You've seen some nice price appreciation at this point. If you bought a virtual, you just bought the Qs virtually, or you bought a virtual call, you've seen a decent gain at this point. So we'll just continue to pay attention to what's going on in the market. Be careful. Again, the long chart, the big chart is still going up, and the short chart is still going up. So we're in parallel with that, and we'll just continue to pay attention. We're still well above the 2-day trend line. Hopefully Monday will be another good day for us, but we shall have to wait and see, won't we? Now, lastly, we're going to go back to our 2-day chart, and we're going to jump over to gold. What do we see going on with gold? Well, gold is down on the 2-day chart, crossed over going down actually back on the 15th, and has continued to move down. Slipped sideways a little bit for the first 2-day candles after that crossover, and then started moving down, and some more sideways slippage between the 24th and the 29th candles. And then over the course of Friday, market down 0.59% on gold. If we look at the intraday chart, we were hoping for a pullback, and we did. We had the pullback we were looking for. And then, of course, with all that move down in the morning, We had a potential entry point sometime in the afternoon as gold was leveling out. If you are looking to jump on that train going down on gold, you do have to note, of course, it's still above the 2-day trend line. We haven't redrawn that at this point, but that is where gold settled out for the week. Now, don't forget, soon after I finish recording this daily broadcast, I'm going to prepare our weekly review and forecast. Hope that you will make sure to tune into that before the market opens on Monday. We so appreciate you being with us. We'd love to hear from you. If you don't have our How to Read a Stock Chart video, our 15-minute video, you need that. You also need the layout that we use at freestockcharts.com. How do you get both of those? Well, you go to chartingwealth.com, sign up for our daily podcast that you'll receive via email, a link to it, and you can listen to it on a daily basis, and you'll receive those 2 added bonuses: How to Read a Stock Chart video link and the link to our charting layout at freestockcharts.com. Follow us on Facebook, Twitter, Instagram, YouTube, you name it, we are there. We love to hear from you. Thank you for all the wonderful comments online. Tell us what you need, what we can do for you. We are here to help at Charting Wealth.